Hey everyone, this is Joe, and in this technical analysis of the stock market video, I'm going to talk about the price action for yesterday and for the week, and then I'm going to talk about the one commodity that beat out gold this week. So stay tuned. Okay, so let's look at the New York Composite to start off. You can see it looks like it's trying to resume the trend down. I would like to see it take out the Wednesday low to really confirm that it's doing that, but it was down almost 144 points for the day. We'll look at a weekly chart here in a minute. Well, let's go ahead and do that right now. Here's the weekly chart. A little more sideways in here, but down 242 points for the week. So it continues to look like a picture, and my wave count is that we're in a third minor wave down, and we're working our way down in that wave count. In the Russell 2000, the Russell 2000 was a lot more negative. You can see how it closed below that Wednesday turnaround pivot. Very negative close, almost right on its low. Matter of fact, the low was 985.61. That's where it closed, right at the low. And the NASDAQ had the same kind of picture. Very, very negative. NASDAQ was down over 3%, I believe. Russell on a weekly basis, look at this and look at the close. It's the lowest close since all the way back over here in June 2013, over 2.5 years. So pretty weak picture here on those indices. And the VIX was up yesterday. I would actually thought it would have been up more given the market action. But it still looks like it's trying to trend. And here's the big thrust that was made on Wednesday, and it came back down. So not really seeing a strong picture in here, but we'll continue to watch. It is getting more and more elevated. Notice how, for a lot of the time, it's struggled to get above 20. If you look back, a lot of the time, here's 20, and it's struggled to get above 20. For a lot of trading, have a few months of spikes, and then even here, look at where's 20, here's 20, okay, and so now here we are, and we're getting above 20, and we pull back, and we're just pulling back to 20. So it's going to be real interesting to see how this acts going forward. The next one is the dollar index. The dollar index on a weekly basis. Look at this pretty big pullback, the lowest close in 3 months. So big pullback. Now, let me convert that to a daily chart. I'm still got a fifth wave up here I'm looking for, but if this, mainly because 4 cannot overlap 1, all right, on Elliott wave counts. But right now it is fractionally, but I wouldn't almost, on a closing basis, it's not. But if we get continued price move down below and take out Thursday's low, then I would sit back and say, this is looking pretty negative, and that bullish wave count's got to go out the window. So, you paint the scenarios, and then you have to sit back. And again, this whole game is a game of probabilities. Okay, nobody knows for sure on any market what's really going to happen. Okay, so you're trying to paint out probabilities and scenarios, and then you watch and see, well, what did that just tell me? What did the signal happen? What's the sign that it's now giving me in the market? Okay, is it confirming my scenario or is it not? And if it's not confirming my scenario, then what is it telling me? That's all you can do. You continue to constantly cycle through the feedback that the market's giving you. All right, so now let's take a look at the consumer discretionary, which was a big move. Of the individual market sectors I take a look at, the consumer discretionary was the biggest drop, over 5% over the last week. And here is the close for last Friday, and then here's the close yesterday. So pretty big move down, big close. And when you look at it on a weekly basis, it's the lowest close in a year, basically, on a weekly basis for consumer discretionary. So you got to sit back and say, what does that mean? Consumer discretionary is starting to go in the tank, rolling over. And so let's see, and what, does it mean we got, people are trying to read the tea leaves and say, does that mean we got a recession coming up, or the economy's getting a lot weaker? Let's see. Let's take a look at silver. Silver SLV, Silver ETF, doing very, very well. Actually, this is the one that beat out gold for the week, slightly a bigger percentage upside, 5.52 for the week. Now, gold is still winning for the year, up over 10% for the year. Nice move in here. And when you look at this, let me take to a weekly basis, you can see it's trying to head up to this trend line, and it's been in a big, downtrend here. And go back. That's good. It's trying to make a run for this top of this trend line here of this channel. Extend that to the right. So, be interesting to see, gold did it on a descending diagonal pattern that it was in and broke through the trend line and got pretty strong. So now we'll see whether or not silver is going to be able to pull off the same thing. Let's take a look at Silver Wheaton since we're talking about silver. Silver Wheaton has had a nice big move. I mean, look where this has come from mid-January down here at 10.5 to 14.12 in just about basically 3 weeks. So one heck of a move. Now it is running into short-term resistance here right about where it closed on Friday. I see another one right here at the previous high at this point for the November 4th high. And then of course the high up here on October 28th. Now it gets through those. Let me zoom out a little bit. It gets through those and there's, some space to run. Here's this gap up here that's just asking to be closed up here at 17 and a quarter or so. And then, of course, that green line, what is that green line? That green line is this big, containing all of this corrective activity from 2011 all the way down. And yeah, I do have an Elliott wave count. I don't have it labeled on here, but I think there's a really good chance that the corrective action may be over, just like I think it is on gold. So we'll continue to monitor this. What we're going to be looking for here is a first 5 waves up. First 5 small waves up, and then we'll be watching the correction, because you're always going to get a correction. You're going to get, it's going to move up and it's come back. Now, let's take a look at real quick. It's up high on the demand index, so it's up as high as where it's started to stall out before. So we got to be a little bit careful in here watching this. The directional movement, not so much. Now the RSI, yeah, it's getting up here. Sometimes though, that just means it's kicking off. When it gets that high, when you get that high on the RSI, a lot of times, 78.18, a lot of times folks will, and I'm just going to say this, the people who haven't been trading, the novices, will sit back and immediately go, oh my gosh, it's overbought. I'm going to sell it. I'm going to sell it short. Well, you got to be really, really careful doing that, because in a non-trending market, that might work. When it starts to trend and you get a really high reading on the RSI like that, what it's telling you is the momentum is kicking off into a new move to the high side, and you don't want to sell that short. All right, so I'm just saying. So you just need to be careful, and we just need to watch in here. Now, it has come a long way in a short period of time. So could it rest? Could it pull back? Yeah, that's what we're watching for right now. So, all right, that's it for today, everyone. Have a great weekend. Check out the website. Come on over and check out the membership page too, and would love to have you become an insider member. This is just a very small portion of what they get, and of course they get that every day of the week. All right, everyone, have a great weekend again.